For decades, the US dollar has been untouchable. It survived wars. It survived financial crises. It survived the collapse of empires. So when headlines say, "The dollar is weakening," most people assume it's temporary. A bad inflation print. A dovish Federal Reserve. A normal market cycle. But what if this time, it's different? What if dollar weakness is not a mistake, but a signal? Because behind the scenes, something much bigger is happening. A slow, quiet shift in global power. One that doesn't explode overnight, but rewrites the rules over years. Today, we're breaking down why the dollar is weakening, who benefits, who's losing control, and why the world is moving toward a multipolar financial system. This is not theory. This is happening now. How the dollar became king. To understand what's breaking, we need to understand what was built. After World War II, the United States emerged as the world's economic and military superpower. The Bretton Woods system made the dollar the center of global finance, backed by gold. Even after the gold standard ended in 1971, the dollar didn't collapse. Why? Because it evolved into something stronger, the petrodollar system. Dollar-based trade. Dollar-denominated debt. Dollar-controlled payment systems. If you wanted oil, you needed dollars. If you wanted global trade, you needed dollars. If you wanted stability, you held dollars. The dollar wasn't just a currency. It was power. And power always creates dependency. The weaponization of the dollar. Then something changed. The dollar stopped being just a neutral tool of trade. And became a weapon. Sanctions. Asset freezes. Payment system restrictions. SWIFT bans. Entire countries were cut off from the dollar-based financial system overnight. And the message was loud and clear: if you don't follow the rules, your money isn't safe. From that moment, governments around the world began asking a dangerous question, backhand index pointing right: what happens if we're next? That question changed everything. De-dollarization is not a myth. Let's be clear. De-dollarization does not mean the dollar disappears tomorrow. It means dependency is being reduced. And the evidence is everywhere: countries settling trade in local currencies. Bilateral agreements bypassing the dollar. Energy deals priced outside USD. Central banks reducing dollar reserves. Massive gold accumulation. This isn't ideology. It's risk management. When too much power sits in one currency, others will always look for an exit. Not loudly. Not suddenly. But strategically. Gold, the quiet vote of no confidence. If you want to know what governments really think, don't listen to speeches. Watch gold. Central banks are buying gold at the fastest pace in modern history. Why? Because gold has no counterparty risk. Can't be sanctioned. Can't be frozen. Can't be printed. Gold doesn't replace the dollar. It hedges against its dominance. Every gold bar added to reserves is a silent message: we trust ourselves more than the system. That's not anti-American. That's rational. US debt and the confidence problem. Now let's talk about the elephant in the room: US government debt. Debt itself isn't the problem. Confidence is. The US finances its system by issuing massive amounts of debt. And the world buys it. But what happens when yields rise? Deficits expand. Buyers hesitate. Interest costs explode. At some point, the question becomes, is this sustainable without currency debasement? A weaker dollar helps reduce real debt burden. Boost exports. Inflate liabilities away. In other words, controlled dollar weakness becomes a policy tool. Not chaos. Managed decline. This is a power transition, not a collapse. Here's the most important part: this is not the end of the dollar. It's the end of unquestioned dominance. We are moving from one financial superpower 2. Multiple financial centers. From dollar-only settlement. 2. Multi-currency systems. From globalization. 2. Strategic fragmentation. The dollar will remain powerful, but it will share the stage. And history tells us, every major power transition reshapes markets. What this means for markets and people. So what does this mean for you? More currency volatility. More geopolitical market shocks. Stronger demand for real assets. Less stability in debt-heavy systems, more importance on macro awareness. The era of set it and forget it investing is fading. Understanding global flows is no longer optional. The real question. The dollar is not collapsing. But the world is no longer built around just one pillar. Dollar weakness is not an accident. It's a signal. A signal that power is spreading. That control is shifting. And that the financial world is entering a new chapter. The real question is not, will the dollar survive? The real question is, backhand index pointing right, will you understand the shift before it's priced in? This is World Flow Finance. Follow the flow, or get caught by it.